So thanks everyone for coming and for joining Coinfirm and our esteemed panel of guests for one of the first a series of webinars delving into some of the regulatory aspects of DeFi and crypto. Today we're discussing one of the hottest areas, which is obviously decentralized finance, which has seen an explosive growth from the start of the year under $1 billion locked across these various protocols to now over 12 billion. And in some cases, volumes which are competing with centralized exchanges, which is something we could think also would never have been foreseen even 2 to 3 months ago. So just to kick things off, I think it would be good to get a bit of an understanding of why our panelists are here, who they are, and what they're working on. So if I go from left to right, Mark, perhaps you'd like to kick us off.
Yeah, pleased to meet you all. My name is Mark Ziller, and I'm part of the integration team at Aave. Aave is a decentralized money market on Ethereum. So we allow, in a decentralized way, permissionless way, to deposit and borrow assets. So if you deposit some assets, you will get a passive income, and you can borrow trustlessly and permissionlessly assets directly on the Ethereum blockchain without any middleman, without any fees in the middle, and without paperwork. And that's basically it.
Very good. Thank you very much, Mark. Peter, how about you jump in next?
Thank you. I'm a lawyer in Gibraltar, and I've been involved in the crypto space for 6 or so years. I started off, like many, very skeptical about this made-up money, particularly Bitcoin. And like many who did the deep dive, I became a fan, you might say. And most of my work is in relation to looking at the regulatory aspects for token sales or offerings or exchanges. And also doing a lot of work at the moment on the organizational structures that go with decentralized governance.
Good. Ben, you're up next.
So my name is Ben Whitby. I do compliance and reg affairs with Credo. We are a cross-chain liquidity platform. We have a decentralized MPC, which is multi-party computation network, which enables institutions to control their own assets with their own staff base and their own governance arrangements. Because we're cross-chain and because of the way that we work, we can enable you to control all layer 1 assets, so Bitcoin, Ethereum, any ERC20, EOS, R3 assets, all from one platform, and give you an audit trail, and not only control your assets, but also transfer those assets instantly between the different counterparties. So we remove counterparty risk completely. It really is the future for institutions. It's a not your Bitcoin, not your keys, not your Bitcoin approach, but for institutions.
Fantastic. And by no means last but not least, Pavel, would you like to give us a quick intro?
Hi, Paweł Kuskowski, CEO and co-founder of Coinfirm. So we are the leading blockchain analytics, blockchain crypto analytics company with main focus on anti-money laundering solution. We recently launched DeFi solution, risk management solution for DeFi, AMLT Oracle, which is being adopted by a number of DeFi protocols, interestingly.
Wonderful. Thank you all so much for joining us. Before we get into the real guts of the conversation, I'd just like to make it clear to the audience, we do want this to be interactive. I can't think of anything worse than a panel when it's just us 4 white middle-aged men talking with each other. If you do have questions, please do enter them into the chat box. We've got a poll which is ongoing. Please do enter your answers there as well. So the reason we've come to talk today is we've had a really interesting couple of weeks in sort of the crypto sphere, and just unbundling the title of the conference, are we at this Napster moment of DeFi? We've seen some quite momentous events with BitMEX and the US regulators teaming up together to charge under the Bank Secrecy Act, to arrest one of the founders operating out of New York. We've seen some very interesting regulatory papers from Mika, and it really feels like we're coming to this head where we have this incredible amount of activity, this big shift away from the centralized exchanges to some of the AMM platforms. And it seems we're at this moment of, is this sustainable? What needs to be put into place? How does this continue to go on this meteoric rise? Perhaps we could kick this off with the only person on this event who's actually involved on the AMM side, who's actually built up a large liquidity pool, and maybe to discuss a little bit about, you know, what they're doing in the space and why we've seen, you know, some of this gross migration from more traditional actors. So Mark, I'll let you go into the really interesting stuff that you guys have been pumping out over the last few weeks.
So instead of focusing just on Harvey, I think it's interesting to share why and all what are the enablers that led DeFi to be a $800 million market at the beginning of the year to be a more than 11 billion market right now, and in a matter of 10 months or something like that. And I think the enablers is all about the synergies and what we call in the ecosystem the money Legos. So you have those building blocks that were missing before, and as soon as you have a new building blocks, you have more synergy and possibility that happen, and basically you end up with something that is orders of magnitude more interesting. And those things started a bit more than 2 years ago, actually, and even almost 3 years ago, with an actor called MakerDAO. And MakerDAO was creating what we call a very specific kind of crypto asset called a stablecoin, the DAI. And the DAI is a very specific crypto asset because it always follows the peg of a fiduciary currency, which is the USD, the US dollar. And it's a non-speculative asset. So it's super interesting for aging trustlessly inside the blockchain directly, for using it as a unit of icon for trade, using it for savings, all this kind of stuff, or even as a medium of exchange for people willing to buy stuff or sell stuff with crypto assets, because who wants to buy with an asset that will maybe 10x into 2 months or something like that, or the other way around. And that's one of the building blocks and one of the main enabler that basically started DeFi, the stable coins. After that, we had the lending pool protocol started with Compound in late 2018. And basically, it allows people to trustlessly inside the Ethereum blockchain to deposit assets and borrow assets. And that's basically what we do. All the money markets right now came from this originator and these enablers. And the last enabler, and I will stop here, don't worry, is that you have what we call the yield staking or yield farming, bunch of protocols that all focus on something that they do very, very well, like trading stable coins, like providing liquidity, like swapping assets. And they basically work together. So the liquidity from one protocol can be used into another protocol at the same time. And you end up with returns that are orders of magnitude higher than what you can find on other markets, but in a trustless and auditable way. And that was the main enablers for me of the DeFi movement that we've seen this year.
So, Mark, I think that's brilliant. It's a great way of, you know, summarizing, you know, these three real sort of big momentous stages. I think it would be good for us to maybe delve in a little bit into some of the incentives involved, because we've seen this massive growth, as you say, from, you know, under 1 billion to just over 11 in a matter of months. And we've seen some pretty interesting and also scary headlines in that time, in terms of these vast sums, you know, of money being moved around into new protocols. Perhaps we could maybe hand over. Ben, did you want to maybe go into a little bit more about some of the incentives that have been kind of created within this market?
Yeah, I mean, that's quite interesting because, you know, I think a lot of the drivers have been around the issuance of governance tokens, yield, and there's a lot of speculation, and you can kind of tie things back to the type of speculation that have taken place with the ICOs and Bitcoin back in 2017 and right back 2013, but it's different because what we're moving to now, as Mark articulated, is a world where we've got the money Legos. The Ethereum blocks kind of working together, and all these various different things that are working together. And what we've effectively got is the ability for, I would say, normal people, but I don't think they are normal people, because in order to take care of DeFi, it's very heavily weighted towards the whales at the moment. You need to put a lot of assets in to get a decent return. But they effectively are normal people. They're not institutions, they're not investment banks, etc., etc. But what they're building and what they're testing and experimenting with is the ability to have a framework of smart contracts and put something in for some risk and get a return on that. And to have that open to the kind of spectrum of people that DeFi can enable is really pretty exciting. But it comes with a lot of risk. Yeah, and that risk can't be undervalued. You know, we've got smart contract risk, we've got the risk that there'll be another flash crash and die and things will move. There's a risk in oracles and various different things pulling together price reference data. We're just at the beginning of the journey on this, and it's really early days.
Okay, and maybe I can hand this over to our, let's say, more regulatory focused panels. Peter, Pavel, I mean, you know, this all sounds wonderful. You know, these great new DeFi protocols, everything out in the open, huge amount of liquidity coming from the centralized exchanges, where sometimes, you know, certain masking of transactions and what have you, and some incredible amounts of money being made. You know, governance tokens, which potentially offer a share in the revenues which are coming from these certain AMMs. What are the issues here? Maybe Peter, do you want to perhaps go into that a little bit?
Yeah, thanks. I guess one thing worth saying, and this is not as a lawyer, but as an admirer of the space and a user, is that one of my friends from KR1, George, calls it the Cambrian explosion. And we'll hear that, you know, again, I think. And that's how it feels. If you've been in this space for a while and you've been watching things, it feels like we really are in the Cambrian explosion stage for crypto. And it's an amazing experience because without getting too theoretical or philosophical, it's a kind of negative capability space. Which means that the old rules don't really apply. You can try and apply them, but there's so much uncertainty and so much innovation and confusion that you actually need new tools, new ways of thinking as a regulator, as a lawyer, as a business person, as a consumer. You know, new ways of interacting. So this is this amazing creative phase we're in, which we're all, I think, should take time to just stop and say, wow, you know, what a wonderful time. But obviously with that goes significant issues and risks. I think what's nice about DeFi, well, coming back to the Napster point, is, you know, the Napster analogy is more relevant for for centralized structures. I think, you know, Napster was centralized to some extent, and in fact, I think Satoshi mentioned Napster as an example of the risks of centralization. DeFi is much more, I think, like BitTorrent, is it not? You know, it's where you're looking at a different way of interacting, where you can't apply the same principles the same way. Some of the principles you can apply the same, but even when you can apply the same principles, you can't necessarily apply them the same way. And I think as a lawyer, thinking how regulators think, that's the real challenge in this space. And the final point there I want to make is there's a lot of skepticism in the legal profession, I think, and by regulators often, about whether, when we talk about this creativity, are we really just talking about regulatory arbitrage? And I think that's a key point that the industry needs to take seriously, because, and by that I mean the entrepreneurs, the investors, because the investors drive some of this. We all need to take seriously, are we really talking about just some form of regulatory arbitrage, which is usually going to be repugnant to regulators? Or are we talking about something in essence different? And I think that has to drive the discussion from my perspective.
Okay. I mean, we've seen in the last couple of weeks a number papers come out from various regulators regarding crypto in general, but maybe not really addressing this specific market because it's exploded so quickly. Pavel, I mean, I know you're involved in a number of sort of steering conversations and so on. You know, what's your opinion on how regulators are kind of seeing this new explosive space? Are they getting it, or are they getting to grips with it, do you think?
No, they're not getting it. You know, I'm pretty sure that they are still, I mean, majority of the regulators are still in the novum of Bitcoin. You know, it's still, they think that it's crazy wild west when it's actually drifted away, you know, I think miles from Bitcoin already. But I think, you know, you know, they're going to come to this point at some stage, you know, to DeFi as well. It's definitely, I mean, one of the major risks, you know, from, let's say, how we see this market. And it's almost like what we are doing with Coinfirm is like we creating the safety net, you know, for many of these projects. You know, I see myself in this space in this way, right? So we see this incredible innovation coming in, and I'm fully supporting this, you know, innovation. It's just a matter of, okay, if something goes wrong, you know, where you're going to be running to, right? So it's something where we actually stepping in and creating this. Okay, you know, you just need to implement this part to cover the bases, you know, so the projects would not be exposed to too much of the regulatory and fraud risk, you know, sanctions risk, etc. You know, so that's something which how we see, you know, being part of this network. I mean, we are in the less exciting, let's say, in terms of like creating technology for this DeFi space. We are in the less exciting part of this, but we see ourselves as key components. You know, so the regulators, they don't get it. I think, you know, the lawyers will start to get it. So if we see, you know, like Kucoin, for example, hacked, and many of the funds is, you know, funneled through, you know, DeFi basically, it's like there is a question of responsibility, right? That's going to be big thing, especially in the light of like, you know, BitMEX and etc. So let's start to be, you know, the area when, you know, everyone will be exposed, you know, and what you do with this project. You just close your eyes, and we see a lot of these things happening in a very similar way, and as ICO, and you know, we've been I think, you know, all of us, we've been through ICO in the different angles. So you remember this crazy time, and there was like, okay, everything is allowed. Then, well, let's start to think about regulations. Then, okay, we need to actually do something about it. You know, that's exactly, I think, you know, that's exactly the same thing. You know.
I think, you know, there's definitely parallels. I think there's certainly differences as well, you know, with DeFi and ICOs. I mean, you know, when you've got the liquidity of a Uniswap now, which is, you know, competing with Coinbase, that shows there's real users, even though there's, you know, still some big whales for putting a majority of transactions through. But I do see that, you know, some of the history may be not repeating itself, but maybe echoing with certain things that people are looking at. So in the ICO game before the DAO judgment, a lot of people just thought they could say, I'm a utility token, and that would be enough, no KYC. If I do KYC, it shows that I'm not a utility token. And then kind of that changed very rapidly over about a week back in 2017. So, you know, these things, they don't really sort of, you know, they don't happen on this long period of time. It seems to be like an explosive event, and then everything kind of changes.
Ryan, you had exactly the same with centralized exchanges. I mean, it was the same path, exactly the same. So it's not ICO maybe comparison. It's like that. This is how it evolves, and I think that's beauty.
No, that's something I want to emphasize on at this point of the conversation. That's DeFi compared to ICOs. Like ICO, where a bunch of people creating nice websites, fancy-looking white papers with some math in it and create a ERC20 token. So a crypto asset with no intrinsic value in 99% of the case. In DeFi, the returns, the income comes from organic economic activity. There's actual people do the trading on Uniswap, so Uniswap collects some fees. There's actual people borrowing assets into Aave, and people are happy to pay those interests because the interest they are paying in Aave is order of magnitude lower than what they will pay in centralized exchange, because obviously there's less middlemen, so the fee are lower. So we cannot compare something that doesn't have intrinsic value with something that has actual economic activity. We can discuss that if this organic activity will grow in the future or shrink in the future. That's a completely valid point. But I think it's a fact that there's an economic activity that generates those returns into DeFi.
Absolutely. As you say, I think it's very, very different from that perspective in terms of there being, really interesting projects which are being launched and, a huge amount of volumes going through there and real genuine innovation in the space. I mean, it's incredibly exciting from that perspective. The one thing that I'd love to delve into a little bit more is we've seen a little bit of guidance that's come out in the last year or so. So we've seen things like the Fat for Travel rule, which talks about so-called stable coins, which is the term that they use quite a lot, and how identity would need to be passed between two transacting bodies, and that even being with non-custodial wallets. We've also seen the Mika document come out recently as well. Ben, I mean, your background and past, you're kind of, I call you the day walker. You've been in that traditional financial institutions, advising from that side, and now you obviously have an incredible layer 2 solution on the market. What do you make of some of the commentary that we're seeing so far from the regulators in some of these papers? You're on mute, Ben.
Yeah, I am. Sorry. I think that maybe the regulators are 2 to 3 years behind. The focus on KYC is very much on the focus of you need to do a photo and a selfie and take photocopies of your passport and proof of address. And everybody in the industry knows that that's not where real money laundering happens. Everybody knows that real money laundering happens through shell corporations, offshore funds and trusts, and the numbers that go through those types of organizations dwarf crypto in massive, massive numbers. Where we're getting to, I think with the FATF travel rule, I'm quite concerned. I think the level of transparency and the level of privacy that is being breached in that proposal, and it's just guidance at this moment in time. People need to kind of recognize that it is just guidance. It's not regulation and it's not mandated until the countries themselves put it into their own text. It is quite scary and quite dangerous. So I'm working with a number of different people at the moment to try and put forward another proposal using some zero knowledge proof technology where we can actually do verification, demonstrate people aren't terrorists, and actually kind of move the verifications around rather than the actual data. I think that we shouldn't underplay just how important DeFi is and just how important crypto is, and the ability to transact on an open, permissionless way for all 7.7 billion people in the world is really, really important. And if we can do it in the right way, it will solve a lot of the issues around human trafficking and the movement of illicit goods and illicit vehicles, because you ask fundamentally at that bottom level, and these people haven't been banked because it's uneconomically viable to bank them. My old firm at HSBC had a line, Barclays has a line. You can't make money from people below a certain level of economic activity. With DeFi, we've got what I would say isn't the Napster moment, but it's the Skype moment. And this is how we're all communicating now. We're communicating via IP because of Skype, because that's kind of what popularized it. And I think we're just at the beginning of the journey for DeFi. But the risks need to be controlled. Society's reflections of regs are there because they reflect society's needs and desires, and we've got to respect that within DeFi as we build. So we've got some challenges.
So, I mean, Pavel, this might be a good time for you to sort of jump in. So, where do you think the regulators are going to turn their attentions to first? Is it going to be on OFAC lists? So, stopping terrorism financing? Is it going to be protecting retail investors, making sure that they're not playing unfair games on certain money markets? where do you think the focus will be as they start getting their heads around this very, very complicated subject?
Yes, I'm pretty sure. I mean, I don't see much movement on the, let's say, customer protection or market abuse. I don't think it's the major topic. The major topics right now is sanctions. So terrorist financing. That's 100%. One of the main topic. And interestingly, even I don't know if you saw this, but I think it's SEC. Who said that paying out, or FinCEN actually paying out ransomware is actually potentially you can breach sanctions. So which is crazy. I think and there's no reason why you willingly don't want to pay ransomware. But this is where this discussion is actually going. And same with money laundering. I think right now with the DeFi and some of the recent examples, and like really what we see. A number of and I don't want to be sounding like really dramatic, but number of funds coming from hacks, ransomwares and etc. going for DeFi. So there's definitely, it's almost like exposing the whole area to huge risk, and it's like it's very low hanging fruit for the regulators to shut this down. And we see this like communication from US regulators that peer-to-peer transaction, it's like it should be regulated. I don't know how it's going to happen, but this is not something which should be taken lightly. And I think this is what Ben is referring to, like when the FATF is going. Like, I think right now the direction is that to push every, let's say, transaction to centralized exchanges, which I think is going to impact dramatically the whole blockchain space. So the way we approach this from our angle is like we want to again say that if we address as a community this AML risk, sanctions risk, then the rest of the arguments could be tackled. But this is one of the major ones.
So this was the point, Pavel, that we kind of asked for. We as part of the decentralized kind of position, if we ask FATF to have an open source way of proving and verifying somebody's identity and data, then they can at least say, well, you're not following our open source protocol. But if the tools don't exist, there's no one else that's going to be able to build them apart from somebody like FATF.
Yeah, I mean, we had this exactly conversation with FATF this week. Let's see. I mean, I think like we know that technology, but I'm sure that as I know that we can build this. KYC repository and provision to DeFi's. Whether this is going to be acceptable and how we build it is a different question. But that's completely technologically is doable. Zero knowledge proof. Stuff like this. I mean, we can build exactly the same solution which we have for centralized finance. For decentralized finance, actually even better.
Even better. Yeah.
Very good. I'm going to cherry pick some of the questions. There's lots coming in, which is great, guys. So please do continue to throw those in. So one of them that we've got in from Johnny Fry, who I know has a particular interest in this side, is we've started to see derivatives being offered on DeFi. And now that ISTA have a platform using smart contracts that's been developed with regulators, what do you see as the key drivers to encourage institutions to move part of the $650 trillion of derivatives on or to DeFi? So I think summarizing that question, how do we allow people to really build on top of some of these protocols and these AMMs? What are going to be the drivers where we see that institutional shift? And I'll put that to Peter, actually. What do you think, Peter?
First of all, I'm going to, a disclaimer, I'm not a derivatives expert. It's such a complex area of interaction, economic activity and regulation. It's also a bit of a messy area of regulation from what I've seen. I suppose the first point is if we're talking about institutional money moving anywhere, we have to be talking about, primarily when we're talking about large sums and large institutions, we have to be talking about them moving into regulated spaces. So the first thing is, what do we mean by derivatives, decentralized derivative trading venues that are regulated? Already you get into a potential quandary there, because to be regulated, and this is what we see with MiCA, regulators have they've got a regulatory hammer, and they're going to use it the same way usually every time. So what's the activity? Is it regulated? Okay, we've found a regulated activity. Who's doing it? Are they regulated? And if they're regulated, who's going to give them authorization, and how do we regulate them? And you can see that, activity, legal person, being an individual or company doing it, here's the framework, all makes sense. If you're going to try and do that decentralized in the sense of not having a legal entity being responsible for the trading venue, that's not going to work. That's never going to work, in my view, under the current system. So you'd have to be talking about existing players who are regulated, adding, I suppose, a non-custodial element to it. That would make sense as a move into decentralized. But we're just talking, I think, about to what extent can you have non-custodial solutions for the existing financial players. Obviously, you could also have, and we see this in the space, and I think Mark may be able to talk about this, but we also will have players who say, okay, I get it. For this particular thing, the only way I can do it is by adding a legal entity that has personality, which can get a license and can be regulated in the traditional sense, and they'll do that. So we will see some coming from this side of the spectrum saying, fine, for this thing, it will be a separate company, it will be authorized, we'll get a license, we'll do it. Otherwise, I think we're talking about probably non-custodial solutions for derivatives.
I think it's a great time to hand over to Mark, because Mark, I mean, with Aave, you obviously have got an interesting structure. In terms of the company itself. Within the UK, I understand you've just got your e-money license. So could you maybe talk us through a little bit of sort of how those two elements kind of sit side by side?
Yeah. So what people really have to understand about DeFi is not something that is completely horizontal. It's a succession of layers. So you have the base layer, the Ethereum protocol, then you have the money market, which is another layer. Then you have the application layers, so all the decentralized finance applications that are building on top of Aave. And why not having a regulated entity layer with all the license, all the regulatory checkbox mark, and say, okay, Aave, the Aave protocol is a neutral, technical money market protocol. It's a bunch of smart contracts that nobody can control but the Aave token holders. So we have a crypto asset that is a governance token, and maybe we will talk a bit more about that. That is in actual and technical and responsible of the enforcement of anything that can happen inside the Aave protocol. And on top of that, you can have a legal entity with people with ties and suits, with all the regulation, all the checkbox that went to the finance school and can talk to the regulator and say, okay, what are the rules? Okay, we will do that. So you want KYC, you want AML, you want origination of funds, you want the 3 last years of income of this person. We will give you all that, and we will create those financial services on top of those technical layers that are based on Ethereum. And I don't see the issue in that. It's completely different layers.
So maybe this is a good time to bring Pavel in, probably from the other side. So Pavel, did you see any issues with this approach? So on one side, you've got the ML, you've got the technical layers, liquidity pool. On the other, you've got the guys in suits and ties adhering to what the regulators want from the KYC. Then leveraging into those pools. Are there any issues you see with that, or?
And I see like 99% of the user and 99.9, except the very technical crypto anarchists, will use the regulated layer, because at the end of the day, I can access all the internet directly from the IP address, directly from a server, directly from a router that I did myself with a satellite or whatever. But most of the time we have service ESP, and we just connect to the internet that is tracked and that we all use.
So I agree with you, Mark, but I think there's a danger and a risk there, because if you take the Facebook example, we can all do that. We can all use that, and the information can go into Facebook, and they've been demonstrated that they've manipulated it. And I think there's a risk that we end up in a financial situation like that as well. And I think there will be a backlash towards privacy that we need to start to incorporate. And unless the regulated institutions embrace that, then we're going to be at a very difficult dichotomy as to where people are going. But I think you've really hit it on the head. And I don't think that the way that business is conducted today is going to change very much. I mean, in the OTC markets, people transact and do paper between themselves, but do we have to do that as a peer-to-peer? I don't know. So,
and something I want to remind the audience is that even if you use, like, let's say, MakerDAO, you have some ETH and you borrow some DAI, what you're gonna do with the DAI? So you can spend it nowhere, because if you want to spend it, you need the fancy monolith card. But in order to have a monolith debit card that will allow you to spend crypto in every point of sale, well, show your ID, do the paperwork. You can send the DAI directly to Kraken or Binance or any crypto exchange. Well, same thing. You have to do the KYC. The regulation is 100% efficient when you get inside crypto and when you get out of crypto. And I think this is the way where the regulation should look, because at the end of the day, what you're going to do with the stablecoins?
100% agree. Fiat and ramps are where they should focus efforts.
So, guys, I don't agree on this. It's actually, I think what you are saying is, crypto. I mean, what you said effectively is, crypto is not important because it's unreal world, and only when you get to the real world, this is when things happen. Well, no, it's not true. It's not the way. It's actually there. You have real money, real transfers, real mixers, the anonymization is happening. KYC, is, as Ben, you pointed out, it's kind of non-existent, in the current form. It's very difficult to stop, so, and you have platforms where you can actually off-ramp as well, money, which are not exchanges. You can buy goods for this. You can exchange private keys to wallets, so I think, the touch points right now, I think it's completely part of the real economy. Crypto is part of the real economy, and if you say, what you said is actually, it's almost like, oh, that's a project which is running, right? It's not important, only, the touch points with fiat. No, I don't think so. It's actually, so with the volumes which you have, that's, from the compliance point of view, it's huge risk. From, even if you talk about, let's say, even if you talk about Africa, Nigeria, right? So 2 years ago, I remember we had this workshop with Nigerian central bank, right, on crypto, and for them, it's not money laundering risk, is the uncontrolled flow in and outflow of funds from the country, right? This is something which, in my mind was not existent, so, and it's like, if you open completely this market for this kind of work, and you say, you close your eyes and say that's only when it's touching real fiat world, that's something which we're creating completely risk which we don't understand even, I think.
I don't think it'll always be fiat or ramps. Just right now is the place to focus this. I think regulation on DeFi right now is still too early, because the people are still experimenting and still building. And
so, how you explain, Ben, the millions which were transferred through, from Kucoin hack to, Uniswap?
But that's why we need solutions like Coinfirm to be able to.
I know, but
what happened in the Kucoin Act is that these actors or this entity collected a wide range of assets and went to Uniswap, like anybody can do. And actually, Uniswap has zero power over this. They cannot stop any trade. Like, technically, it's impossible. And the entity swap does assets for it, which is the native asset of Ethereum. And that's it.
It's impossible to stop it, because by design of it, it's impossible to stop it. Actually, like, if you attach, our Oracle, and I don't want to be pitching this, but if you attach some, the external source of data, which you verify, that's actually, and you can integrate this with smart contract. That's something which is, it's doable very quickly. And this is not like saying, all right, we just don't implement this and we cannot stop it. No, you were responsible for this.
That's a technical possibility maybe for the version 3 or version 4 or Uniswap, but the Uniswap we know today, you cannot do that.
Because there's a choice of people who don't want to do this.
Yeah, but that's a matter of fact. Like, this is like the state of the road right now. We can discuss about the future for sure, but on the technical perspective, that's not an option today.
So just on that point, I think it's worth bringing up. Uniswap's a great example. So Uniswap started with some really big guys putting a lot of liquidity into that protocol and earning a lot of that governance token, which now pays out fees. And they're from institutional backgrounds, they have a variety of different risks themselves, but they've profited from the protocol, right? By being the first ones to provide that liquidity. If we do see things like this where, let's say, hacked coins, sanctionless addresses start interacting with those protocols, is there a case to say that those initial providers, or those guys who are most active or holding the wallets within those systems, potentially are opening themselves up to any liability? I'm going to put this to the one lawyer on the call, Peter. I think you can probably unbundle that a little bit more than most.
Well, I'm very interested in what Mark's saying about the technical state of play in terms of using oracles, because I think when we're talking about DeFi, it's fundamentally important to know whether we're currently able to have Oracle smart, on-chain querying of addresses to find out whether a transaction could be stopped purely on the smart contract, not based on any human intervention. And the way I think about the risk is that yes, you obviously, any decentralized project that doesn't have a legal entity has lots of risks in terms of being considered to be a general partnership for the people involved in it. There's no legal entity for many of them. And so you get into that common liability that they all share, which is a risk, particularly in the early stages of any decentralized project. What we've seen in DeFi is ways in which that risk is largely dropped off during the evolution and the growth of the platforms. But yeah, there is a risk. I think that one of the things I've been thinking about with one of my friends who's an investor is actually, if you look at enforcement action, it tends to be practical. Who can they get? Who can they make a statement with? It's not always the worst person who gets hit, it's the easiest person. And there I think about if there are solutions, so that's the big if, going back to Mark's point, if there are solutions that can work for smart contracts in blacklisting and blocking and what have you, then actually the investors will often be the easiest target. So there are lots of investors who are getting in early on these DeFi projects, and they're getting revenue share from transactions, some of which are transactions from criminals, which are known to be criminals. So it's not like anyone's disagreeing. Someone's stolen something and they're using a protocol to do something with it. Whether they're laundering or not is a separate point, but they're certainly using criminal proceeds through that platform, which is generating revenue, which the investor's getting the benefit of. If you think about it in basic principles and using the analogy as well, is that, if there are solutions that could mitigate that risk without killing the platform or the protocol, then I think a regulator or an enforcement agency could say, well, didn't you at least look at the extent to which you could have done something? You can't just say decentralization is a magic word. It's not a magic word. It doesn't get you out of jail just because you've used the word decentralization. So I think there needs to be an honesty when looking at this as a serious investor to say to yourself, look, there's a big movement for ESG investment, environmental, social governance, which is you layer on top of your investment strategy. What impact does this have in the world? Is it a good impact? Am I happy with the reputational risk? Is it a likely to be, long-lived investment? Now, I get in crypto that's quite hard because everything moves so quickly and it's short, but you still need to kind of layer on top of your investments some basic due diligence and some basic questions that should go to the techies. Look, what can we do so that we look better than the others who do nothing. And don't just tell me the word decentralization means nothing, or tell me what we would need to build for it to mean something, because I'll invest in those things too. You know, and then you have a holistic investment philosophy, which you can defend if ever they come knocking.
I think it's a really exciting conversation. I mean, I think this is the start of decentralized compliance tools.
Yeah, completely. I completely agree. And that's going to be interesting area.
Yeah, that's amazing. I mean, I think that's the thing. It's like real world peer-to-peer people don't want to do bad things.
Yeah.
And if they're given the opportunity to transact in a way that if you're buying a car, you don't want to take money from somebody that is potentially going to give you counterfeit funds. It's going to be exactly the same in this way. We just need to make sure that the costs involved in doing that reflect down to the peer rather than a centralized institution, which has always been this barrier to serving that long tail.
Yeah. No, I think, overall, I don't see that, we are in the stage, I hope not for another year at least, where the risk is huge. So I think it's still, everyone is kind of, there will be some time until, anything serious will be coming in, from the regulators on the DeFi space here. So there's still, but, it needs to be, and there's interesting discussion on the, decentralization, right? What is actually decentralized sufficiently, how we can check it. This is, for me, I think this is, starting point in terms of responsibility, right? Are you responsible for protocol? What is your, control over funds? Do you have, is the, let's say, DeFi actually holding private keys or not holding private keys, to the funds? I mean, there's like, you cannot compare DeFi to DeFi. This is what, the starting point is, okay, how it is actually designed, who is responsible? Do we have sufficient qualification? I think, the hack on MakerDAO shows that, these guys are very capable in terms of technology, but there's still, it's very early stage in terms of technology, and, how you actually protect, these funds, and what's the responsibility if something is gone, or, like the term which is being used in our team, which we say, exit scam. I think, exit scam actually exists only in crypto, right? So it's almost like, no, it's not.
It's a real term that's been.
Yeah, no, but I think, it's a real term, but is it like in traditional finance as well? Or is actually
finance? Yeah, absolutely. Yeah,
okay.
Lots of
But it's actually really, so by design, you actually, doing a scam or exit hack, like.
Pavel, I very much doubt when it comes to finance that we're much more innovative than Wall Street in terms of behaviors, including bad behaviors.
To be, because if everything in traditional finance was hidden.
I mean, in the bad behavior sense.
Yeah. I mean,
but you're right. We need to make it transparent.
Yeah. And there's some like different language being used, in our space.
So, I mean, would anyone like to maybe put their neck out there and propose how this comes about? I mean, we've kind of, we've seen certain provisions from the aptly named CryptoMom to talk about this 2-year period where you can kind of become decentralized and try to do the right things. But with the explosion we're seeing on protocols, right? We're seeing these protocols, they come up overnight. There's hundreds of millions going through them, and they're unaltered smart contracts. And this 2-year period, does that become reasonable when we see huge amounts of volumes instantly happening? Like, how as an industry do we ensure that this is a safe space to come and play for larger organizations to actually get involved and really help fulfill the potential? I mean, have any of you got any ideas in terms of what might be able to be put in place in maybe a self-regulatory manner, perhaps?
I've been, if you don't mind, I've been thinking about this a bit, and I think we need some kind of industry-wide coordination. And I was actually coming from the the ESG perspective, because it's actually quite a nice perspective to tie in different market participants, serious investors who want to say something about the way in which they invest. And we have got some bigger investors in the space already, and we want more to come. many of which will need to say something about the impact of their investments and how they profile them, how they risk score them. So we're going to need to take some of the existing standards used in the normal investment world and do some work to work out how do we apply that to crypto, how do we apply that to DeFi as a having a particular set of issues, and what do we need to change to make it work in order to apply it. And I think in that process we could see the industry put forward lots of standards which people could get behind, and also help fund in R&D in solutions that solve some of the problems that come up. So I think what's missing at the moment, quite frankly, is sufficient motive. And I'm hoping that what we've seen in the last few weeks in terms of enforcement action, I'm hoping that the people in DeFi, the smart ones, realize that there's a very good chance in 2 years' time that it will be the DeFi sector that's getting late enforcements at the end of the year, as the SEC and the DOJ seem to like doing. You know, in 2 years' time, it could be the DeFi space that is in the crosshairs, and everyone's going, oh yeah, well of course it was obvious they were going to be arrested. You know, let's not get there. We've got time, I think, to show the serious, the people who are looking at this with concern, that there are serious people in this that want it to have some longevity. Lots of people will obviously be using decentralization just as a form of regulatory arbitrage. Of course they will. But that's not everyone. There are lots of people who get that there's more going on here. There's more, it's much more interesting than that. So those people need to get together and start talking and say, what can we do? What can we do, to Mark's point, to make sure that if you are going to attach some kind of Oracle solution to do some basic checking, we're not saying to do the same as a regulated entity, but to do something. You know, how do we make sure that everyone agrees it works and it won't just kill the fundamental, you know, purpose of the smart contract?
On this point, you know, I think, we launched, our product, for decentralized finance. It works, it works pretty neat, and we do some other things. I mean, and the response from the industry is lukewarm, on this, let's say, especially on the key projects, saying that we are sufficiently decentralized and we don't care. I mean, and this is something which I could hear from the some major projects which failed historically, right? This was exactly the same language. Bitcoin on crypto was not money. It's not so we don't have to apply AML. And then this I remember the biggest change in our industry, in the analytics industry, was BTCE arrest, right? There was like, OpenAI, really huge impact to the, everyone started to look for solution, everyone started to be, careful about regulations. I think overall, as we sit here, I think, we have incredible experience in compliance, which is unique for the industry. I remember, payment sector, I think, payment sector, they still understand less in terms of compliance that, crypto. You have technologies which are very knowledgeable about regulations, which is incredible. So I think this is. So I'm not sure if we have time. I'm not sure if there's a lot of time to properly address this. It could be really quick scapegoat for regulators. That's my fear. But I might be wrong.
I think there's a real danger that regulations move too quickly. And block innovation.
Yeah,
I think we've got a long way to go in terms of the crypto asset space, in terms of what we can build and what we can do. I love the idea of decentralized compliance tools, about pushing that down to the peer in terms of their responsibility. I think you should go and raise an AIP after this call on Aave and put that for the DAO to vote on and see what happens. Because that's the way that these things are managed, right?
That's actually the proper process. So
go through the proper process, yeah. Get some Aave tokens, raise an AIP and see what the community says.
I'll see you later, guys. I'm off.
Thanks,
No.
Peter. We'll take you without you. We'll let you go.
No, I'm joking. I'm off to Aave. I'm going to do it now. I can do it while we're talking. Don't worry.
And I think we need to get to a position where compliance has always been a ridiculously high cost of operational cost. And I think we need to, I talk a lot about the power of zero. And if we can move to the power of zero, where we've got a zero cost to getting an identity, which a lot of decentralized identity platforms are doing, we can move to the power of zero in terms of, if they built it, if FATF built it on Ethereum, it would just be a gas call, and that would be it. It would be done. People would be able to green light, red light within the same transaction.
But man, I think it's doable. I think it's completely
doable.
And I think, this is, the only difference, it's always gonna be a cost, for this industry. And trust me, even the smallest cost is a cost, so we are, sometimes we are making fun of it, it's probably more expensive for, the coffee to the office than AML right now for crypto space, so it's no longer the cost. It's more mentality and, getting into this mood of actually, right, this is what we need to do. It's not something that I can run away from. And I think, the BitMEX case, and you all aware of what happened basically. So, moving to Seychelles and, trying to kind of stay away to, from risky jurisdiction was no longer the protection. I think, we see this, and we're going to see this more often, so that's something which is interesting, so, let's see how it's gonna pan out on this, but it's definitely, interesting moment for DeFi.
Just
guys,
on the
Ryan, if I may ask you a question, do you think that DeFi will also replace the market makers or not? Is there a room for this or not?
To be honest, I think they will. Yeah, I think especially if you look at the FX market as a really good example. It's a very simple position in terms of you're taking fiat currencies. The further that you are away from the tool set, the less sophisticated you are as a player in that space. The spreads that you're paying are significant.
Yeah.
There's a massive problem in the FX space, and if we move to central bank digital currencies and an AMM in that space, that line would be much more efficient for the entire market, and all of that wasted revenue that was going into what I would call overpriced, lazy pricing could be going spent somewhere else.
Yeah.
And also on the technical perspective, innovations such as the flash loans or even the Uniswap model, what we call the automated market maker, are designed to kill the spread. So basically, DeFi is a machine to make sure that you get the fair price of any asset at any point. And everything is designed, the whole set of tools is designed to kill, to give you the opportunity to take an arbitrage opportunity, so you kill the arbitrage opportunity, because obviously if there's some money to be made, there's someone that's going to be interested to do it. So at the end of the day, you reach markets that are much more liquid and resilient to volatility on this kind of stuff.
I think the interesting thing is, where does that line go in terms of the liquidity versus the small transactions, which Uniswap is amazing at, and the larger transactions, which Uniswap is not so good at, because it moves quite significant in terms of the price in that respect.
Exactly, but you have like other protocols that are more specialized. So for example, if you want to transact $10 million of USDC into DAI, do it on Curve, not on Uniswap, and you will get the best possible deal that you can get in the industry, centralized exchange includes.
But we're only getting this innovation in this space because we can take the best brains and apply them to the model, apply them to the problems that are out there, without this huge barrier of you need to be regulated, you need to have a massive capitalization, because that just restricts the people to actually can play and innovate in that space to a very small number of people. And you need the best brains on the table solving these problems.
But what I wanted to share is that I'm an optimist, so because we always say like regulation is bad, the hammer and all these kind of things. One of the things that there's a lot of self-regulation, not really regulation, but self-guidelines inside the ecosystem. You have like the DeFi score from Consensus, the Gauntlet score that just have been released by Gauntlet Network that give like the amount of audit and some kind of trust and security score to platforms. You also have like all the major website that where you can find the price or the opportunities into DeFi that will show you very clearly if that platform has some security audit done, when those audits have been done, all this kind of stuff to increase the sentiment of security. With Aave, we have quite a decent grant program, and we are not the only one inside the industry. Like millions of dollars are invested by the industry actors in order to support the innovation and the new project. So if you are a small project, like 2 or 3 developers willing to build on Aave, you can apply to the grant program of Aave, but you can also apply to a wide variety of venues in order to kickstart your project and fund your security audits and all this kind of stuff. And also the regulators, it's not opaque. It's not the big evil guy in his office that you cannot talk to and only go out of the office to put you in jail. They are actual human beings that you can talk to, and you can meet and make sure that, okay, we are building this, we are innovating, what do you think of it? And it's actually possible to meet the regulator, and it's happen quite often. And they are not here to kill innovation. They are here to protect the end users. That's their job. And if they can provide advice, they will do it most of the time. And there's also a lot of people that are able, that spend a lot of time in school and that can give some advice into it. And I think most of the industry are not just anarchists that say regulation, we don't care. Is that we try to build new things. We try to create. We try to do things that are not completely crazy given the current ecosystem of regulation. And maybe we will be not perfectly aligned with the set of regulation, but if we 99% of the project, if you tell them, well, this is like a bit too far from the line, please do this, they will react immediately in the good sense.
Very good. Guys, I'm very aware that we're coming up to the hour. Maybe it's a good time to maybe call it. I've just got one last question, just because I've got the opportunity to put it to probably the guys who are really at the leading edge of where we're going in this space. If you were going to predict one thing that's going to happen over the next 12 months within DeFi, what do you think that might be? So I'll start with you, Ben. How's that?
So I think I have to say 2 things. I think greater adoption and a smart contract failure.
So go on, put a number on it. How many billion are we going to see locked away in 12 months' time?
Only one smart contract failure?
Yeah, well, yeah. So the danger is depending on which one is depending on how bad things potentially could get. I think we will continue to see a giant kind of influx into the space, and we'll probably peak at about 22 billion, I think. So I don't think we are anywhere near the peak at this moment in time. And then something could crash and it could come all the way back down to 5. But I think that would be tied to lots of other different things, because we've seen quite a lot of correlation at the moment between crypto and the traditional markets and stocks, and we're at such a weird time of uncertainty with the elections and the virus, and it's very strange. But we're really in zombie land in terms of what's happened with the economy, because all the furlough and all the various different liquidity and money printer go burr. It's put a lot of people into very, very strange territory.
I couldn't agree more. Peter, what are your thoughts after you've obviously put forward the ML Oracle proposal to Aave's AIP vote? Obviously, of course, that being accepted and unanimously being brought through. What are your thoughts on the space?
Not AML blacklist, it's different. Remember, we're talking about a spectrum of compliance. I don't want to make it impossible from the beginning. Actually, what I think, and I'm an optimist too, I guess, the areas I'm looking at, I think we will start to see separation between sophisticated long-term investors and you're punters. You know, you're just pure punters. I think we're going to start to see people realize, going to that point about ESG and governance, and we're going to see people realize that you can't have 100% of your focus as a techie and as a team just on building what you want without there being a cost. And the cost will be something bad happening to the industry, maybe not you, but you know, some bad activity which is going to impact your ability to get to where you want to go. And I think the smart ones will say, well, look, either we will put some of our time towards that, or we'll help fund and support or purchase, you know, tools that do that, so that we've got a credible position. And I think we're going to see that. I hope so.
Wonderful. Pavel, what are your thoughts on what we're going to see in the DeFi space in the next 12 months?
I think, you know, I mean, the interesting move is that we see, you know, Binance DeFi, you know, Coinbase DeFi, Whitby DeFi, you know, so I think it's going to be alignment. How I see, I mean, at the moment, you know, how I see going, you know, this moving forward is actually creating this really large liquidity pools, you know, so I think, you know, the whole market of market making will be moving. I mean, that's my guess, you know, will be moving. So liquidity will be moving from exchanges to, you know, DeFi's. But again, you know, let's say this would be kind of very specific for crypto, you know, high cost of entry, you know, more professional players. You know, this is how I understand DeFi, you know, in this, I mean, where the direction is, you know, and then everyone, you know, less sophisticated, and, you know, frankly, 95, I think, you know, around 95% of users of crypto would be, you know, not sophisticated users, you know. So I mean, and the you know, to get into Uniswap is not easy, right? It's actually pretty complicated and also costly, you know. So you need to know what you are doing, how you are doing. So I think, you know, that the market making will be very interesting part. And another aspect, unfortunately, will be, you know, all the illicit activity, you know, shuffled through. So that's something which, in my mind, if this is not going to be, you know, looked after, there's going to be a killer.
And Mark, I've left you last for a reason, because I'm hoping that you're going to give me an absolutely visionary perspective in 12 months' time. So I want we're going to see a SpaceX funded by the Aave liquidity pool type 12-month prediction. So please don't disappoint us. What do you think, Mark? What's the big things going to happen in the next 12 months?
Yeah, I was talking to Elon just before the call. So in terms of on the technical perspective, what people have to realize is that end of the year and early next year will be the kickoff. Like we talk at my first intervention inside this panel was about the enablers. And the last enabler, and probably not the last, but the next enabler, and probably the biggest one, will be the layer 2, the scalability. And basically, if you remember, I'm saying DeFi is not a flat line, it's a bunch of layers. And the scalability layers will not be one technical solution where everybody goes and everybody do the trading super fast and for a very small cost, but a wide bunch of scalability solution, a wide bunch of layers. Among them, the scary part is the zero knowledge proof layers, because that's basically black box. Nobody can prevent you to go to the black box. You can do whatever you want in the black box, and nobody can prevent you to go away from the black box. What we should do, and in the regulatory perspective, is to say, well, okay, the black box, on the technical perspective, nobody can stop that. But what can we build inside the non-black box? What can we build to protect the users? Because permissionless means anybody can create stuff, the best and the worst. And there's no way to stop that. And DeFi will grow 10, 100-fold probably next year. And how do we prepare and how do we work on that? And that's super interesting, and I'm super happy to be a small part of that movement.
Fantastic. That was big and bold, 10 to 100 times. Amazing. I do hope it happens. Gentlemen, thank you so much for joining us from various places, basements, home offices, and what have you. I think it's been a really interesting conversation, and the first of a few that we're going to plan to do at Coinfirm, to bring in gentlemen like yourselves and ladies as well to be able to talk about this space and the various complex aspects of it. We will be sending out the link to the recording of the event to anyone who signed up via Eventbrite. Would you be comfortable with us sharing your Twitter handles, email addresses to those who have signed up to the invite list so they can get in contact with you? That'd be all right?
Of course, that's cool.
Wonderful. All right, well, I think we'll wrap it up there. So again, thank you so much for your time and a brilliant conversation, and very much look forward to the next one.
Thank you all.
Thank you, Ryan. Thank you, guys.
Okay. Thanks everyone who attended.
Thank you. See you.